Hi, this is Acme with the US Chartbreakers here at Zach's Traders Cafe for Thursday, the 1st of June. Starting off with the S&P as usual, and here I suppose you could say that it's performing relatively well given the uncertainties on a fundamental basis, but we've got that broken August resistance line there from last year around 41.30. Above that, still looking for a break, a sustained break through 4200 and possibly even up to 43.40 by maybe by the end of next month if we get a decent trigger for that. If we do break back below 41.40, then the risk is of a test of the 50-day moving average around 4100 at the moment, 4110 in fact, and that would be, or that is currently the worst that we're looking at. Obviously, we can see over the last month or so we've had support coming in above the 50-day line, so that's the reason for suggesting that the 50-day line will be the limit on downside. As far as the stocks are concerned, it's quite a motley bunch, starting off with a stock which has been all over the place in the recent past, almost a random walk within a range, but support there, the main support there for CXapp around the $6 mark, the 200-day line currently in the picture in terms of possible support. That's around $9.10, and above $9.10 on the 200-day line, looking for $15 again. Above $15 would then open up the possibility of a move towards the resistance line there from back in February, heading for 28. But obviously at the moment that looks like it's quite a long way away. At the moment, just really looking for consolidation near the $16 mark. On to a stock which I haven't covered here before, but hopefully it'll be a frequent flyer like many of the other ones in today's collection. Here we've got Eltek, and beautiful double gaps to the upside over the course of May, and beautiful bull flag breakout as well with a gap on the second gap. Current situation is that we were looking back at the old spike that we had in 2 years ago near the $8.80 area. Above that, we're looking for further progress, perhaps as much as up to $13, which is a resistance line projection from way back in 2019. So above 880, looking for $13 on an Eltek over the next month or so. Moving along to a stock which has appeared here before. We've got Enveric, and here it's interesting to see the progression that the shares are managed at the moment, finding support above the 200-day moving average around $3.20. But the next level up is up to around the $5 mark, and that December resistance line projection, then obviously best case scenario through $7 at a November resistance line projection. But the key here is remaining above the 200-day line around $3.20, which it looks as though the shares will be able to do. Stock on the way up at the moment as well is Fusion Pharmaceuticals. Beautiful rising trend channel there, a good steady feature on the daily chart for the last year. We found support almost bang on the 50-day moving average around $4.10, and above that looking for as high as $6.20 by the end of this month. Ideally, there's no price action now, back below the recent peak around $4.70, which was April-May resistance for the share. So a reasonable risk-reward situation on that, and it doesn't look too volatile. OpenDoor has been featured here many times, and we have a situation where the shares have emerged through the north side of the 200-day moving average over recent days, very gingerly doing that. 200-day line around $2.24, and the target now, while we're above the 200-day line, is up to $4 as soon as the end of this month. The target there coming from a resistance line projection from November last year. So a nice tradable situation versus the 200-day line on OpenDoor. Stock that I haven't looked at for a couple of years, I think, in fact, is coming up next, PDS Biotechnology. A good time to rejoin the fray, given the way that we've got both rising 50 and 200-day moving averages there in the run-up to a golden cross. Unfilled gap to the upside to start the week, and the view at the moment is that at least while we're above the old resistance on the way down around $9, we're looking for as high as $14 or even $15 at the top of that rising trend channel from back in November 2021. So nice new bullish phase. Looks like it's on the way for PDS. Another stock which is new to our collection of the US Chartbreakers is UiPath, and here it's interesting because we've got rising trend channel there from back in August. Top of the channel there heading for $19.80, so hopefully we'll get that over the next week or so, above the $20 mark, looking for as high as $25 by the end of next month. So a nice turnaround situation there at UiPath, helped along by the gap close buy signal that we had at the end of last month. Moving on to another new name, and here you can see that Rockwell Medical is really breaking out very nicely indeed. We've got a rising trend channel here from back in June, or basically 1 year trend channel there, and the view here is at above the $3 mark, which has been recent resistance, looking for as high as $4.90 by the end of the month. Always that classic pattern there of the shares finding support above the 50-day line, even on dips, so that should hopefully do the trick for the shares. Stop loss probably around the initial peak that we had at the end of last month, around 275, if you can afford that. Repeat viewing here on the next stock. Here we've got Shang Feng, and the shares making progress. I mean, amazing chart given how little data there is, but we hit the first target there around $10 at the top of that rising trend channel from back in April. Next level up would be up to $15 by the end of next month if we can get a decent end of day close through the $10 mark. So let's see if Shang Feng can pull off an unlikely success. SoFi is next, and it's a stock we've been giving lots of coverage of late. The reason is that it looks like obviously it is turning higher. We've had gaps through the 50 and 200-day line, and then another gap higher yesterday, breaking our initial target there around $6.70, and above that looking for a new level up, which would be as high as $9 by the end of this month. So the whole effect here really a bear trap from below the March support area in the $5.20 area. So the shares building on that. On to Tesla, which obviously is never a low profile situation. Here we're gingerly breaking through the 200-day moving average. Obviously in the recent past, if you look there in August last year, little breaks of the 200-day line were actually a selling point, so one has to be very wary of that. Maybe as little as an end of day close back below the 200-day moving average at 198 would be a signal that this is a bull trap or a failure at the 200-day line. Otherwise, we have the prospect, or the possibility rather, of a move to the top of that, or to that October resistance line projection at $280 as soon as the end of next month. But really, one to watch out very closely in terms of holding that $200 area over the near term on Tesla. Last three to go in this rather marathon session. First is T-Stamp. And here, couldn't resist looking at this one, given that looks like we're in a broadening triangle base. And just breaking the 50-day line around $2.30. Above that, looking for the 200-day line at $3.80, and then obviously on the 1 to 2 month basis, maybe by the end of next month, up to $7.80. The other reason we're including the shares is the bullish divergence. So we had lower lows for April and May, but a higher RSI trace, and that's dragged the shares higher. On to stock that I have looked at here before, but not for a long time. I think here we've got Twilio breaking the 200-day moving average properly, unlike Tesla, and looking for the shares to hit $90 by the end of next month. A gap close buy signal, in fact, it's a bear trap gap close buy signal over the course of the last bit of May, and as I said, above the 200-day line, looking for as high as $90. So 200-day line currently around the $61 area. That's it for me today. More updates tomorrow.